the best way we thought we would explain Web3 would be do a parallel with the internet. And I'm relatively old, as you can see. I started working on the internet in the 1990s when HTTP protocol did not exist. I worked with Gopher and IRC, going from my high school to university and connecting to these, big terminals, had a big screen, green, and keyboard was connected to it. And this is what we call the read-only web. It lasted approximately 5 years. With the invention of JavaScript in the 1997 and Java 1995, we were able to create a read-write web. And new websites were created, like Amazon and eBay and Google, and we were able to start able to publish the content. So this is the second wave. Yeah? First wave, read-only. Second wave, read-write web. Third wave, social web, because with publishing of the content, we were also able to tag our friends. We were also able to share the media, and this is what kicked off the third wave of growth, now reaching 5.2 billion users in the internet. Blockchain grows very similarly in these exact 3 waves. The first one is just we call it read-only blockchain. So it's basically Bitcoin. With the introduction of the white paper in 2008, you can send a transaction. You cannot really program it. It's a read-only blockchain. The second, I'm simplifying, but please bear with me. Yeah? The second is read-write blockchain, where with the invention of 2014 of Ethereum, you can actually program smart contracts. So we call it the read-write blockchain. Now with this, you could do, for example, ICOs, initial coin offerings. You could do fundraising through token issuance. You could program a lending borrowing protocol like Compound. You could do a stable coin like DAI on Maker. And this was for us a big breaking point which kicked off another growth of the number of users. The third one is what we call social blockchain, because with the NFTs and with the DAOs, now you are able to add another financial layer on top of your social connections. And all of these basically 3 phases, so the read-only blockchain, read-write blockchain, and the social blockchain, created additional use cases which are cash flow generating most of the time. So for example, in the read-only blockchain, the use cases are, as I said, exchanges, market makers, cash flow generating businesses. We are not focusing on that segment anymore in our investment strategies, but it's an important segment for growth investors. I will speak later in investing in Web3 together with Index and KKR on the fact that this is where most of the growth investments are still going. Exchanges, market makers, custodians, and infrastructure providers. We are, however, focusing on the infrastructure in terms of programmable smart contracts. We think the technology is not there yet to be fully scalable. Yes, we have faster blockchains. Yes, we have layer 2 scaling solutions, but we do not have the full stack, technology full stack already decentralized. I don't want to go too much into detail, but Marek, in his section called Full Tech Stack Decentralization, will speak about different use cases. We are focusing a lot also on DeFi, particularly with our yield funds, not only on stablecoins and stablecoin blockchains like Terra, but also on lending borrowing protocols, yield aggregators, Sommelier, I think Zaki is somewhere here, YEarn, which is an aggregator of yield across Ethereum as well. Insurance, we are heavily focused on the insurance, searching for projects there like Nexus Mutual or Risk Harbor. We are focused on derivatives. I think Barney should be here somewhere from Vega Protocol, and also indexes. All of these, thanks to blockchain, is possible without the central authority, without an intermediary. It's all programmed on a smart contract. Then the NFTs, which were actually, the first NFT was created in 2015, but right now we split them into the following categories, into avatars and collectibles, and they help you, or they help people to actually flex on the social web. In real life, you have a Ferrari, you have a Louis Vuitton bag. On the social internet, you are now able, on Twitter and also in the future on Instagram, to show the profile picture that NFT that you bought and show your social status. And we all, as human beings, we have the need of belonging to a social group, and then within that social group to have a social status. And that's what avatars and collectibles help. Dusan will speak about all of this in his section on NFTs and creator economy. There is also art, there is also gaming. I put here Star Atlas. Star Atlas is probably the most known game on Solana, although personally I play a lot Mini Royale by far away. The players actually earn money. I just looked this morning on Star Atlas, the largest player has around $5 million of assets under management just through the different rocket ships that he was able to buy across, the time that he's playing. And then, there is a long tail, 2 million, 1.5, 1 million. But play to earn is a big value proposition. Before, you were not able to earn money by playing as much as you are today. And last area of NFTs is social. Let me just highlight one startup here, Speakeasy.io. Thanks to the NFTs that you are holding in your wallet, they will be able to connect you to something like a Discord, like a chat channel, but based on the NFTs that you hold, you are only able to access different channels and only speak to different people. So it's like a decentralized Discord. We are very excited about this project. Who knows what is a DAO? Yeah, okay, 50% of people, that's cool. So, for the remaining part, DAO stands for Decentralized Autonomous Organization. Dusan, again, will speak about this in his panel on DAOs. It's basically like a Delaware LLC, but it's not a company. It's a group of people who get together and then can invest, but they can do it instantly on a blockchain. They can invest, they can, in a software code, have rules, how they behave with their investments. And as a result, there are 4 different areas of DAOs that we categorize today. Investments like Metacartel. Metacartel has around 60 DAO members and around 600 participants. Together, they pool millions of dollars, and they are able to decide which seed project they would support. The second is governance. Some protocols like Maker or Compound are now fully decentralized. There is no central authority. There is no Maker labs. There is no Compound labs which are developing the solution, but it's actually the community deciding what will be the next feature developed through DAO and their voting procedures. Dusan, as I said, will explain this. The third one is non-profits. Ukraine DAO is built on Nation.io platform, which is on Solana. You can, with one click, create any non-profit organization that will accept money, and then you can, through voting, decide into which non-profit you would send that money. So here, Ukraine DAO actually sends all the money automatically to Ukraine.sol, and it's Ukraine.sol is a wallet address on Solana, which is owned by a non-profit helping Ukraine. And also, the fourth one is clubs. So people get together to be part of a social community through DAOs. One example is Surf House DAO. Surf House DAO is our idea and one of the first projects implemented by Martin from Labs. We are actually buying or renting surf houses throughout the world. So the first location will be Carcavelos in Portugal. We have 3 shortlisted locations, and it will not be hostels or hotels. It will be like hacker houses. So together then with Solana, we will bring developers there. It will be close to the beach, and you could actually go surfing in the morning and then programming during the day and then surfing again in the evening. And all of these will be federated through Surf House DAO. The website is already online. You can go on surfhousedao.com, and we actually registered this Surf House DAO into the Solana Riptide hackathon, which is ongoing currently. The funding will be easy, so Surf House DAO will issue 10,000 NFTs, which we will sell. This is the initial amount of roughly $3 million that we will raise. We will then use it to basically fund the whole DAO operations. From a regulatory perspective, we cannot finance the real estate through the money we raised from NFT issuance. That's why there will be mainly renting and membership fees, but you can only be a member of a Surf House if you hold an NFT. Cool. So all of these use cases are actually resulting in the fact that the number of users is growing. According to Crypto.com, there are currently 300 million users on-chain through different blockchains. and it's growing at 80% per annum. It's a faster adoption rate than on the internet initially. But it might seem when you look at and listen and read media that actually crypto is a lot of speculation going through some booms and busts. But if you zoom out and long term, you look at KPIs like developer activity, startup activity, or social media activity from 2011, when this technology was invented, there is a clear growth of around 60 to 80% per annum. And now I would like to discuss this growth and also Web3 with my fellow friends and panelists, Dean, Zaki, and Barney. So thanks a lot, guys, for coming. I know some of you came
this one's yours.
Really from far away. So thank you so much again. I would like to start with, we had a discussion with Dean yesterday, because in our analysis, it shows that actually the growth of the crypto market cap or the price then drives basically the social media and the media attention, which then drives the increase of developers and then new projects. So, and Dean is like, hey, Victor, but is it like correlation or is it like causation? Yeah, is it like price driving developers, or is it really like, developers and their inventions driving the price? So the first question I have for you guys is like, what made you join, blockchain and crypto? Was it price or was it something else?
Well, I'll start there. It was not price, because we started ramping up and raised funds in the middle of crypto winter. So what it was...
I remember.
Yeah. So I'm Dean Tribble. I'm CEO of Agoric. And I worked on the first production smart contract. You talked about how you were doing internet stuff in the early days. So I worked on the internet before there was an internet. So I worked on the first production smart contract back in 1989. And... and that was sort of a vision of software enforcing the terms of a contract-like arrangement between third parties. And that, and since then we've got Airbnb and Uber and Lyft and eBay and all of these smart contract businesses, fundamentally, that are trillion-dollar market cap before blockchain. So I didn't care about blockchain. What I cared about was this new way of doing software that could enable human cooperation, right? It enables strangers to rent the house of another stranger and go have a vacation and have it work out. It enables all these kinds of relationships, and I wanted more of that. So when blockchain came out, with this replicated execution, with machines in different jurisdictions, machines in different administrative domains, so that no human or organization or government could compromise the integrity of execution. Now suddenly you could do these smart contract businesses without the trusted intermediary, without the ticket-selling agency in the middle taking 35% or what have you. And so, so that was, on the one hand, this new possibility of these new business arrangements and these smart contract businesses in, directly implementing cooperation between humans. And on the other hand, this Byzantine environment where people would attack it, where it was, security was not, I'll make some bad security choices, and 4 years later it'll come back to haunt my successor, but I've already moved on. And so you get this very poor security environment that we live with in the Web2 space. Instead, you screwed up, you lost $30 million the next day. You fix a bug badly, and then you lose another $30 million, right? That happened multiple times in 2017. And so 2017, we saw all of this. Friends of mine that were deep into the blockchain space at the time saw all of this, and contacted some of us that had this other way of doing security that we'd been working on for literally decades, since the smart contract work all pre-blockchain, and said, could you help? And that was sort of the foundation of Agoric, and that's what got me into it, was the fact that we had technology that could solve it, and that there was this opportunity to make these new kinds of cooperations really flourish.
So what is actually Agoric?
So Agoric is a new layer 1 blockchain based on the Cosmos technology that you talked about earlier, but we're really bringing to the world of developers the ability to build smart contracts in JavaScript, in a hardened version of JavaScript. So instead of the 10,000 developers maybe across the blockchains right now, we can reach the 10 million developers that already know how to build interesting fintech and applications in JavaScript.
In a secure way.
In a secure way, that's right.
Okay, cool. Yeah. Zaki, what is it for you?
Yeah, so I'm Zaki. I am a co-founder of a protocol called Sommelier, but basically what I do is I build protocols. I built a lot of Cosmos. I've been building blockchains since 2013. And why blockchains? I like blockchains because, what was very interesting and compelling is there's two things. It's like, one is you have this ability to work on very hard, difficult, challenging computer science problems. I was working on those at a time when it was still a question whether or not blockchains would ever reach a large audience, a large number of users. So it was just a bunch of interesting problems. Now it's a bunch of interesting problems with large impact. So you can solve when you solve problems, now hundreds of millions of people will use your protocols, which has been a really nice change, especially since the beginning of the pandemic. 2021, 2021, seeing all these people move on chain, seeing lots of people using wallets, actually interacting with protocols, has been one of the most rewarding things about this difficult period. But the other, I think the nature of the problems and the challenge of the problems and how hard it is to build all these things will always continue to attract very smart people to the space, sort of regardless of what happens to the price.
Okay, great. Barney?
Hi, I'm Barney. I'm co-founder of a protocol called Vega, which you've mentioned already a couple of times, I think, in the derivative space. For me, what got me into it was sort of the technical fascination and an interest in, cryptocurrency, cryptography, everything like that, but also, something's going. Also, an interest in how blockchain is kind of the next set of technologies that democratizes access to innovation and to sort of value creation. And I got into Bitcoin originally and early into Ethereum in the pre-sale because I could see that just like the internet had kind of democratized the sharing of information and even the creation of certain types of business and applications, the next layer is kind of this financial layer, and that sort of breaks down even more of those walls that prevent someone in their bedroom from disrupting $1 trillion industry. And that was super exciting. And when it came to Vega, the same thing applied, but what I realized was that for the first time, my experience and my skills, not only on the computer science and kind of crypto side of things, but also in business and in trading and in finance, could come together, and I could see sort of a vertical within that where I could have a big difference, and that got me super excited.
Which actually builds on my next question is what are the use cases? Well, when we are speaking to investors, what we learned, we have to focus a lot on use cases in order for them to get it. It's really, like Satoshi said, it's really complicated to explain, because it puts on head everything, how we are actually functioning since we're born. We trusted in the government, trusted in a bank, now we trust in code, So what are the use cases that you guys are most excited about, across what I showed before? The DeFi, NFTs, DAOs, Web3, or is it what actually really excites you? Barney.
Obviously I have a DeFi slant here because Vega's derivatives protocol, but actually it's really the combination of use cases and the things that are possible that weren't possible before. Particularly when you look at finance, it was kind of left behind by the internet revolution. So many types of business could be disrupted overnight or challenged overnight by new entrants via the internet, but finance stayed this kind of walled fortress with a small number of people controlling it. And whilst you can look at the democratic angle of is that fair, is that right, do those people have too much control, do they exploit the system, but you can also just look at the innovation angle and the angle of moving society forward and say those institutions are slow, they do not understand all the problems, they're not there on the ground, and people who can innovate faster, can come up with new and more exciting ideas. And so really that use case to me is a very important one. There are lots of concrete examples of how that can benefit individual industries, but really actually once you start combining these things together and you look at the social elements of this, you look at the organizational impacts of things like DAOs, and then you look at the new financial tools that allow you to build businesses in that way. It's really the combination of those things that gets me very excited in terms of use case.
Okay. And the composability, so you can actually call smart contracts.
Absolutely.
Yeah. Okay, Zaki?
So I think all of those use cases, what they really come down to is the desire to move the sort of the pipes of finance to sort of a uniform platform. The idea of the internet was really, okay, we have all of these different custom proprietary systems that don't interoperate properly, and let's move them to one uniform way of talking, one uniform set of protocols, and an enormous amount of innovation came out of it. In finance, we have had, interoperability protocols for, very high value trades, like, you have stock exchanges and derivative exchanges, and they speak one set of protocols. And then we have the trivial, you have your Shopifys, et cetera, that speak another set of protocols. And really the blockchain vision is one protocol, sort of like one set of systems that can sort of provide high integrity transactions for the most trivial things and the most profound things across like one uniform set of systems and one uniform set of public infrastructure that we've all built.
And well, I'll add to that. And the important thing about it's spanning this trivial to profound is oftentimes you don't know until retrospect which things were actually trivial and which things were profound. And so enabling lots of different human cooperation is critical. But your question makes me think of the many years where people ask, well, what is the use case for the internet really? And the answer is, I'm still not sure I could tell you what was the important use case, but clearly it was sort of the broad spectrum all working together. Now, for me in particular, I care a lot about the DeFi case in particular first. The reason is that's where people will be at risk the earliest and the most. And so, systemically, as I said, we care about this broad spectrum of use cases, but in terms of enabling stable growth that people feel safe in participating in, having something that really reduces precludes a bunch of the security hazards in the current blockchain infrastructure is actually going to be very valuable. And so we started out focusing on a model to make it much safer. Particularly as you go from a few thousand developers to a few million developers, you really have to eliminate a lot of those in order for the next application to not have a security hole that someone steals millions out of. And you really want that pervasive safety everywhere, and then you can start to build this broad spectrum of applications, without building a whole bunch of new risk into this new infrastructure that, frankly, we suffer from in the old infrastructure. And so that's why a lot of our focus is, DeFi Legos that can plug together safely. That's the financial backing is a basis for then doing NFTs or governance or what have you.
I agree with that. Actually, if I recall correctly, Mark Andreessen said when we invented web, we forgot about finance, about payments. So that's why today when we buy something online, we have to put a credit card. And it goes through 4 banks and every bank takes a profit. Or recently, I think I was wanted to buy some stocks of Netflix denominated in US dollars, and I was selling my stocks of AXA denominated in euro. Settlement took a huge amount of time, and I paid so much fees in Forex and settlement fees. On the blockchain, it's immediate. Yeah, you could do this through AnyDex or I don't know, Terra, Mirror on Terra protocol. So this is what really I'm thinking about internet was the basically globalization of information. I can read your blog or your Twitter just from Prague in San Francisco, Belmont, and blockchains is just this automation of financial services. But in order for this to grow further, what we think is currently the biggest barrier is bring more developers into this space. There was recently a report by Electric Capital saying 18,000 developers, monthly active developers, are currently developing on blockchain. This is just GitHub commits, but still, it's a KPI. So what do you think we need to do to bring this, to 1,000x, to bring them to 20 million? Dean?
To me, the biggest thing is you have to meet developers where they're at, right? A big challenge of the early smart contract systems, it was programmable in Solidity, of which, there were at least 100 people that knew that programming language after it came out. And now that's grown a lot since then, but it's not a system and language that is, it's got a lot of security hazards to it, and it's not something that people have previously used in their daily life. Do you train people to use that, or do you enable them to use the tools they're used to? What we saw a lot of, I was in fintech before getting into blockchain, and there's a lot of really entrepreneurial, really smart people doing lots of interesting financial things, and they would look at the blockchain stuff, and it's okay, this isn't really ready for prime time. I can't use development tools, I don't have test infrastructure, I can't, deploy into environments that do all the things I'm used to have a robust system. The user interfaces are terrible, all that sort of thing. So they would look and they would bounce, and they would go, I'll go work for my buddy's hedge fund, right? And so getting a environment that is much more accessible to them is critical to not have these smart people bounce off of the, just going to keep circulating the ecosystem. And so some of that, I mean, vast improvements just bringing in the systems where you can use, Rust and so forth. But, as I said, our goal is JavaScript simply because that's where the people are. That's where the developers are.
Understood. Jackie?
So I guess one thing I would say, though, is, on one hand, the number of developers is still very small, and I think the 20,000 number is perfectly realistic. It's also just amazing how much leverage blockchain has provided for 20,000 developers. 20,000 developers is like an Uber, whereas like we built an entirely new multi-trillion-dollar financial system with 20,000 developers. So there's a huge amount of leverage. And it's a huge amount of leverage with, I think, I agree with Dean's take that we have like a huge amount of leverage with truly terrible tools. Like truly terrible tools. And I'm very excited about Agoric. I'm very excited about Agoric. I'm also excited about stuff that's coming out of the sort of diaspora of the DM project as it falls apart. I think there are probably two languages I'm most excited about. One is hardened JavaScript, and the other one is Move as next generation platform. So I think there's we have the tools in computer science to take what we are building and make it much more accessible and much more safe. It doesn't have to be that smart contracts are like this terrifying development environment where you put one variable in the wrong place, or you think about something the wrong way and you miss something and $100 million are gone tomorrow. We can do a lot better. So I'm very excited about the future of making these things safer, easier to use, less terrifying.
I think the way I look at this is slightly kind of the very early infrastructure of the web was probably built by way less than 20,000 people. And we're sort of building infrastructure now. We're trying to build use cases, but it's probably like that sort of early time on the web where you needed an Oracle server and you had to administrate it yourself, and everything was kind of very difficult. And so it's harder to build and it's harder to be a developer. So I think I'm excited by the same things that these guys are in terms of improvements in the languages, but I'm also excited about providing better abstraction layers and sort of moving down the stack, because you can start a business now by connecting Shopify to some web development or even taking off-the-shelf templates, and the amount of development you do as a developer is limited to kind of glue and things that don't actually require a huge amount of safety. So on the one hand, we need to make it safer to build backends and to build core bits of infrastructure, but on the other hand, we need to start providing abstraction layers that let people actually glue bits of the ecosystem together without being exposed to the really unsafe stuff, because you'll get to 20 million developers when most of them need to know a little bit of HTML, a little bit of JavaScript, glue together the protocols that Compound or Agoric or whoever else have built, and they can do something really useful with that. And then, of course, the other thing will be demonstrating real usage, because the further down the stack you go, the less you'll be able to sort of make money out of large community-driven projects that are layer ones and that actually are sort of searching for use cases and have an ecosystem fund. And the more you'll be like, I get funded, I have a year or 18 months to be revenue generating, I've got to go do that. And so really, when people start seeing that working, the flywheel of people going, I want to build because I can get a team of 4 people, we can do something in our bedroom, it doesn't require very low level layer 1 engineering, but we can start to build a profitable business, then everyone will be a Web3 developer.
Let me just add something onto that. That as we get more developers, I mean, right now we need crypto wizards and back-end engineers and these deep systems engineering. As we get more developers, we'll get more UX folk, more good UI folk, more front-end folk, and so some of the unfriendliness of the user interactions and so forth, you'll start to get people whose specialty is improving that, and so there'll be a nice ramp as we get farther along. So I expect that the growth will also change the character of what's hard and what we could do.
Which actually introduces my next question, because as I showed, Crypto.com said there are around 300 million users. What can we do to grow those users? Yeah, and for example, my father is a university professor in cryptography. Yeah, he's not using crypto at all, yeah, because it's too complicated. Yeah? So what can we do to grow this user base by multiple X?
Well, so many of those users bought crypto and are sitting on it. right? And so giving them more that they can do safely will make those users active users, and that, then they'll tell two friends, and they'll tell two friends, and so forth. I mean, part of it is merely making it so that there's more that they can successfully do, more ways they can use it instead of just accumulating it in safety. Now, it's hugely valuable that they're accumulating assets in the crypto space, not only for them, but for the overall ecosystem. But enabling it to be something that engages them in, or that they use in their normal course of business, as opposed to merely a hedge. I mean, there's millions of users that have gold in their portfolio, but they don't do anything with gold. Crypto they can do a lot more with, and as we start to open up those actual use cases and integration with standard finance or shipping or trade or what have you, you'll see that growth naturally.
Okay. So you think that the front end will be, like easy to use mobile apps like Revolut that will use like DeFi rails in the background, or?
Some of that, yeah. I mean, we will get successful user growth when users don't need to think it's crypto behind the scenes. Yeah. But the other part of the front end will be, business-to-business stuff where I'm bill of ladings or NFTs, right? And so I've now got much higher reliability shipping manifests and handoffs, and chain of custody across multiple shipping industries. And World Economic Forum estimates that if we succeeded at getting bill of lading with the kind of integrity that blockchain can bring, you get 15% increase in world trade and 5% increase in world GDP. So that's a 10 or 15-year prospect, but once that's happening, it's not like the guy driving the truck cares that it's blockchain, and yet you've got this huge increase in net value.
Okay, so you believe in B2B use cases?
Oh yeah, absolutely.
Okay. Exactly.
Not immediately, but absolutely.
I think I'll flip the question a little bit and say just how much. So our current user base, I think a lot of people talk, like sometimes they get sort of denigrated as just gamblers, right? They're like, oh, I'm going to buy this NFT. Hopefully it'll go up. I'll flip it. I'm much more appreciative of our current user base. Our user base is sort of putting their life savings in early, somewhat untested software, and sometimes we pay them, and we have to pay them a lot of money to do that. But the thing that is sort of being constructed is we are battle testing all of this open source infrastructure. Every single time someone sort of uses our platforms for maybe speculative use cases, maybe because they like it, maybe because they want to participate in a DAO with their friends, maybe they want to invest with their friends. There's an enormous amount of sort of positive social benefit and positive externalities that's coming out of the current user base. So I just think that our current user base is making all of our software a lot better at a very rapid rate. And at some point, it will become so robust that it will be very hard for people who are who don't want to participate in this high risk, high stress sort of speculative cycle that we're currently in to be like, oh, I can just put my money into this smart contract. It will invest it for me. It'll optimize my yields. These are the kind of things we're building at Sommelier. And I don't even have to think about it, and it will just take care of it all for me. But there's going to be a lot of disasters, speculative moments, large cap events, moons and crashes and all of these things and hacks between here and there. And I'm really appreciative of all of the users we have right now who are along with us on that journey.
Thank you, Barney.
Yeah, I think I think Zaki's absolutely right on that respect. We've got the sort of early adopters and fast followers who, even if at some point they are gambling or taking risks or speculating, it could be on teams they like, it could be on protocols they like, it could be on futures they want to see, it could just be because they want to invest with their friends, and I think that's very important, but that also doesn't scale to the kind of the next 10, 100,000 X number of users. And I think, sort of Dean said earlier, you've got to meet developers where they're at. Even more so, you've got to meet users where they're at. And users don't move from where they're at. Developers might do if there's money in it, but for users, there's usually not. It's usually about solving a problem. And one of the exciting things about the NFT use case, you look at people in the community who are flipping it, but you go to LA or somewhere and go hang out at sort of crypto meetups, and you'll meet artists who really aren't that into crypto, but they're like, I struggle to get my art seen, I struggle to get my art paid for until I'm dead, and they're like, I have found in NFTs a way to build a community around my art, to sell it and to do things. And these are the first signs of crypto meeting users where they're at. It's actually not we need early adopters who want 70% yield to test an untested DeFi protocol. It's like someone who makes art who we're solving a problem for that they didn't solve before. And that to me is really, really exciting. So actually, I think more and more what we need to see the industry start to do is prove that robustness using those early adopters, using everything they can, prove the scalability, and then meet the users where they're at and start solving real problems, and then we'll see the growth come.
Yeah, fully agree. We have many traditional investors sitting here. So my last question is, you guys raised, tens of millions of dollars each. If you compare fundraising, Web3 and crypto and blockchain versus like Web2, what are the most differences that struck you, Barney?
They are, as far as I can tell, completely different in some ways and exactly the same in others. So, obviously, when you want to raise money, it is this incredibly strange sort of process which you go through, and it's sort of extremely repetitive, extremely long process, but it also helps you refine your business. And I actually think, there are some people who denigrate the idea of taking money from traditional investors or VCs. I think that's probably unhelpful to the space. I think there's a lot of both connectivity in terms of the ecosystem, there's a lot of knowledge, there's a lot of benefit and signaling and everything else that comes from sort of experienced investors. But then you're constantly under evaluation. So in Web 2, there's kind of a lot of secrecy and privacy and sort of lack of liquidity, if you like, around investments. With Web 3, increasingly, there's more liquidity early, there's more kind of community feedback all the time. Everything is kind of on show. You're often working open source or out in the open as well. So I think it sort of challenges you to get the messaging right around how you're using the money you've raised, what you're doing for the community, and also to deal with the continuous sort of feedback you get from the community, both in terms of price and everything else. So it's pretty different. And then, obviously you've just kind of got this sort of crowdfunding layer on top of that, which is not limited just to crypto. There's sort of crowdfunding in other places as well. But certainly the crowdfunding layer is interesting in crypto because the participants in your crowdfunding become sort of essential to your success, whereas in many other businesses, they're a small sort of bit of extra capital on top of their VC round. Maybe they're people who sort of, like drinking Brewdog beer or something, and so they get a little bit of a kickback. But really, it isn't necessarily essential to the success, whereas in sort of Web3, you end up with the sort of the core of your community and the thing that's essential to your success being related to the fundraising you did in a very different way.
Zaki?
I haven't raised money in a traditional business in a long time. So but what I hear is that it seems like traditional VC raising has become more like crypto raising. And crypto used to be this weird anomaly, and now things have become the sort of regular world of investment has become more like crypto in terms of the speed at which investments happen, the fact that the secondary markets have become, but crypto market structure is very non-traditional. DEXs have changed. Where liquidity comes from and how the market structure of these businesses work. And you, as a founder, have to have a very sophisticated understanding of how your token is going to be distributed, all of these things that they require a lot of expertise and a lot of conversation. And I think on the investor side, there's probably needs to be more understanding of what does it mean for price discovery to happen in decentralized. You are going to see fewer projects doing many rounds before they have liquidity from decentralized exchanges. It used to take years to get centralized exchange liquidity. Now depending on what ecosystem a project is building in, you can have liquidity and it's just a question of choosing to turn it on.
Understand. Dean?
So there's some really significant differences in my experience from this, having done fundraising on both sides, though, as Zaki said, it's been a few years. I think it was Kyle of Multicoin, early on when we were fundraising, it's we only invest in tokens, and they're basically trading early liquidity for control. So instead of having control over the company, they're getting the ability to get their return in a couple of years instead of 10 years, right? To be able to exit if you screw up or go off the rails. They don't need to control you. They simply take their tokens, sell it on the market, and move on. And that changes the relationship between the investor investors and the company. The second is, when we went out for our, we raised in Crypto Winter, we were doing equity, and thank you guys for participating. When we went out to do our round in 2021, or late 2020, and we were starting down the route of going to the investors, and it was still hard in spite of it being a bull market because, they were, they would ask the hard questions. What's your go-to-market? What's your, all these things that were very different from all the rest of the conversations we had to have with the rest of the industry, with all of our validators and technical partners and so forth. And all of our validators and technical partners are saying, we want in, let us in. We want to buy some tokens. We believe in this stuff, carry it forward. And, and we realized, we should start there. And that just totally turned around our fundraising strategy, where when we first went out fundraising, we had this model of we'll only talk to crypto qualified investors, right? Because how they're going to make money, how we're going to make money, where our revenue streams come from is just so different in the crypto industry than traditional industry that if you're explaining that to an investor, you just waste an enormous amount of time trying to explain how it is that you're going to be successful. And so it's got to be, and so firms like Rockaway provide this bridge, this buffering where you understand how it is that we need to make money, and you can help us figure that out, how we all get a return. Whereas a traditional investor, they're, it's an uphill battle to make that conversation successful. And so there's narrow down to the people that are qualified, but then raise money from the technical community that understands and believes in you, and then the investors come in on top of that because they can go, there's a big bunch of people, or there's sort of a due diligence that a bunch of technical people in the industry are already partnering with you. We can get behind that and help push, and so it becomes a different relationship.
Okay. Great. Well, thank you so much, guys. We don't have time for any questions. Maybe one from the audience. Any question from the audience? No, not yet. Well, guys, you can also ask questions during lunch. And thank you again for the panelists. You traveled from far away. Thanks again.
Yeah.
Thanks.
Thanks, Victor.